Let's talk about something that most people don't even realize is happening until it's too late. You've been married for years. You trusted your spouse to handle the money. Maybe they had the financial background. Or maybe you were focused on raising the kids, managing the home, running and building your own career. But one day, something didn't feel right. You go to buy groceries and your card gets declined. Or you apply for a loan in your own name and get denied. Or maybe you're in the middle of a divorce and suddenly the mortgage hasn't been paid. And it's not a mistake, it's a strategy, one designed to hurt you. If any of this sounds familiar, I want you to lean in right now because this episode is for you. This is what financial abuse can look like. It doesn't leave bruises. It leaves unpaid bills, bad credit, legal headaches, and a deep, painful sense of betrayal. It's quiet and it's powerful. I'm Jody Bruns, your host here on Beyond the House, and I've worked with hundreds of divorcing homeowners, attorneys, and financial professionals through the Divorce Lending Association and as the creator of the CDLP certification. Today, we're not just talking about numbers. We're talking about control, power, and the silent way finances are used to manipulate people in marriage and long after it ends. So whether you're navigating a divorce yourself or supporting someone who is, here's what we'll cover. The difference between marital waste and real financial abuse, how financial infidelity starts, and how it can turn into something much worse, what the red flags look like in real life, and how a certified divorce lending professional can help spot manipulation hiding in financial documents, and the steps you can take starting right now to protect yourself. This is going to be an honest conversation, and if any part of it hits home, I want you to hear me. This is not your fault. You are not imagining it, and you are not alone. Let's start with something simple, but important. What's the difference between being financially irresponsible and being financially abusive? Marital waste and financial abuse often get lumped together, but they're very different things. Marital waste is when someone spends money irresponsibly. Think about gambling away savings, buying luxury items behind your back, or secretly spending on someone outside of the marriage. It's damaging, it's selfish, but it's not always intentional harm. It's just reckless. Financial abuse, on the other hand, is intentional. It's about control. It's about keeping you stuck. Let me give you some examples I see far too often. A husband gives a wife a budget while hiding tens of thousands in income. A wife refuses to refinance the mortgage, not because she can't, but because she wants her ex to stay legally tied to the home. A partner opens secret credit cards in the other spouse's name, racks up the debt, and then lets it default. The message is clear. You don't get to leave, or if you do, you won't survive without me. Here's a quick way to tell the difference. Marital waste is misusing money. Financial abuse is using money to control. One is careless, the other is calculated. And the scary part, it doesn't always start as abuse. It can start with one little secret, one forgot to mention it moment, which brings us to something you might not have heard of, financial infidelity. This isn't always abuse, but it's a warning sign, and it's where a lot of financial control starts. Financial infidelity is when your partner hides money, lies about income, opens secret accounts, or makes large financial decisions behind your back. Maybe they have a credit card you didn't know about. Maybe they got a raise and didn't tell you. Maybe they're secretly sending money to a family member or even an affair partner. At first, it might seem like they're just bad at communicating, or maybe you even blamed yourself for not asking. But here's the difference. If it happens once and there's accountability, transparency, and a fix, that's one thing. But if it keeps happening, if the secrecy is part of a pattern, especially if it makes you feel small, disrespected, or out of control, that's no longer about money. That's about power. So ask yourself, Is this avoiding conflict or maintaining control? Is it a one-time slip or a repeated strategy? Because here's the truth. Financial infidelity breaks trust. Financial abuse breaks freedom. Let me share something I don't talk about often. I'm strong. I've built businesses. I raised a beautiful family now of 5 adult children. But in a previous marriage, I found myself in a place I never thought I'd be. For starters, my husband, he did not earn more than me, but I was paying for everything. Our mortgage, utilities, even his personal expenses. Meanwhile, he was secretly putting his entire income into an investment account I didn't even know existed. Then the mortgage market crashed in 2008. I needed help. I asked him to contribute to the household. His response? Just one word. No. No explanation, no empathy, no support. That was the moment I realized I wasn't in a partnership. I was in a one-sided arrangement that kept me stuck. There was no yelling, no threats, but the silence, the secrets, the control over money, that was the abuse. And if you're listening to this thinking, wow, that's me, please know you're not crazy, and you're certainly not alone. Financial abuse is one of the least visual and most dangerous forms of control in a relationship. It's when one partner uses money to dominate, manipulate, or isolate the other. Here's what it can look like in real life. There's control over access to money. You're on a strict budget, but your partner doesn't follow the same rules. You have to ask for permission to spend, and you're not on the bank accounts. What about withholding financial information? You don't know what they earn. You don't see the bills. You have no idea how much is saved or owed. What about coercion? Hidden debt? Maybe your spouse opens credit cards in your name. You're pressured to sign for loans you don't understand. And then there's the sabotaging of your work or your ability to earn your own money. You're discouraged from working, or every time you try, there's drama and conflict. Your schedule gets disrupted. You're made to feel guilty about wanting your own career. I see all the time real estate and housing manipulation in divorce. One party stops paying the mortgage. They refuse to refinance. Or they tell you to sign a document you don't fully understand. And maybe that one document could cost you your share of the home. And then all too often, there's post-divorce control. They delay child support. They refuse to refinance, keeping you tied to a mortgage that's going to tank your credit when they stop making the payment. So here's a quick note. I am not an attorney, but I work closely with divorce lawyers and financial planners to make sure your mortgage strategy aligns with legal outcomes. I worked with a woman, her name was Emily, whose husband maxed out credit cards in her name, drained her savings, and stopped paying the mortgage, all while telling her they couldn't even afford to get a divorce. She didn't know the full damage until she applied for a new home loan. Her credit was destroyed. She couldn't qualify. That's how financial abuse traps you, even after you've left. Financial abuse doesn't usually start big. It starts with little things, small decisions made without you, secrecy, guilt trips about spending, and then it builds. So here are the red flags to watch for. You're not allowed to access bank or credit accounts. You're regularly denied money for basic needs while your spouse spends freely. You're pressured into signing documents you don't understand. Your credit score drops for debts you didn't even know about. You're discouraged or outright blocked from working. You feel stuck in the relationship because of finances. So here's a powerful question to ask yourself. If your partner walked out tomorrow, could you access money, pay your bills, and stay in the home? If the answer is no, that's a sign something's wrong, and you deserve to take steps now. So let's talk strategy. Here's a step-by-step action plan to help you protect yourself and start taking control again. If it's before the divorce, pull your credit. Find out what's in your name. Look for surprise debts or credit lines. Open your own personal checking and savings account and then quietly begin separating your finances. Gather financial documents such as tax returns, mortgage statements, bank statements, pay stubs. Make copies and store them safely. And talk to a CDLP. A certified divorce lending professional can help you understand how debt, credit, and housing will impact your options. And then during the divorce, demand full financial disclosure. And if necessary, your attorney can subpoena missing records. Maybe you need to hire a forensic accountant. If you suspect hidden assets, bring in a professional to help uncover the truth. Structure real estate decisions carefully. Don't agree to keep the house or sell it without understanding the mortgage and tax implications. That's where your CDLP becomes essential. And after the divorce, make sure that you do refinance or sell the home and remove yourself from any joint mortgage liability. Close those joint credit accounts. Don't leave the door open for new debt in your name. And monitor your credit. Check it daily or monthly for unexpected activity. And start rebuilding your savings and credit, one step at a time, because you're starting fresh. So what does a certified divorce lending professional actually do? We don't just process mortgages. We help build a strategic plan to make sure your financial choices support your legal and long-term goals. Here's how we help. We can spot red flags in mortgage and property records. We identify unknown debts or credit activity. We work with your legal team to avoid financial traps in your divorce agreement, and we help you qualify for a new mortgage or protect your ability to stay in the home. We can create a plan that supports your housing goals post-divorce. And when we suspect financial abuse, we connect you to resources who can help. So let's wrap up with a few powerful reminders and start noticing the red flags that you might have missed earlier. Those red flags include no access to money or financial accounts, being pressured to sign documents you don't understand, strange or unexplained drops in your credit score, and no post-divorce housing plan. You need to start implementing your recovery steps. Pull your credit, monitor it regularly, open private financial accounts, work with a CDLP to build a safe housing plan, and partner with legal and financial professionals who understand abuse dynamics. Financial abuse can make you feel trapped, broken, and unsure where to turn. But here's the truth. You can take back control. You can rebuild. You can protect yourself and your future. You're not alone. You're not to blame. And this moment right here can be the turning point. So take that first step. Pull your credit, talk to a CDLP, and make a plan. And if you need help, reach out. Message me on Instagram or LinkedIn or email me directly. I read every message. If this episode spoke to you, share it. Leave a review. And visit jodybruns.com for free resources and next steps. And until next time, stay informed, stay empowered, and take control of your financial future.